Good afternoon, everybody. How are you? You guys will forgive me today. Apologies in advance. I'm sort of working with a half a brain today. As I've mentioned in webinars past, I experienced this brain fog early to late afternoon. Thank you to those of you who send suggestions, supplements, and the like, but I honestly believe it's a neurological carryover from COVID. And some days it's not so bad, and some days on a Thursday, it's a little worse. So I'm going to take my time with today's webinar, if that's okay. We might run a few minutes over, and I'll try to make it interesting. We're going to review the time signals from the histogram forecasts that were published earlier this week. We're going to look at some longer term forecasts. I'm going to answer all the questions that you throw at me. I want to sort of walk away from the PowerPoint today. I don't feel like we should work with PowerPoints this afternoon. And I'm going to talk about stuff that I'm interested in. And I'm hopeful that you guys will sort of follow along and catch what I'm laying down here. We sell indicators that attempt to predict when market moves are likely to occur in the future. These tools have been in the space since almost 15 years ago. It's been quite some time. CL0623. Let me just check something here. Yeah, we'll take a look at some weird stuff. And just one more day. How about that? Is there a way to do that? Did he give me that here? No, that was in additional revisions. All right, we'll open up another chart. So just bear with me here when I set up something. I have something that I want to show everybody. And I should probably put my glasses on. Daily DC. Okay, well, that will work, won't it? Here we have crude futures. Let me turn this music off. And I've been following this market now for a little while as a way to prove to you that what I'm about to show you is not based on some weird guru logic. Last week, we were talking about how markets are predictive. And I set about showing you a number of different ways to sort of prove that this was, in fact, the case. There are several different ways to analyze times predictively. One is through natural law or energy. The second is through data mining. And the third is through vibrational law. On the website, we call this force. We're going to spend the majority of our time reviewing the forecasts from the data mining indicator, a program on the website called TachEon Warp. But here I want to bring your attention to an indicator that used to be part of a package called Alpha, which tracks the full moon and new moon first quarter and third quarter phases of the market. And when we analyze time, we're going to see positive signals, negative signals, and patterns. 1, 2, 4, 5, 6, and 7, and then 8 and 9. When I say patterns, I'm referring to the handout in your GoToWebinar handout section. And a pattern is simply looking at how the market arrived at the buying or selling signal in relation to price action. So, for example, if we look at CL on a daily chart, and we're recognizing that every one of the large red dots is a new moon, right? That's a selling pressure signal. It's the absence of energy being reflected from the sun on the population of the earth at night. We'll just write a little NM right here. There's a difference between the one that I've circled up top and the one that I'm going to put an X through down here. The signal at the top is a plain vanilla pattern 2. There's nothing uniquely special about it. It's just a selling pressure signal. But the signal down here is unique in that it emulates the mechanics of the pattern. What do I mean by that? Well, in a pattern 4, there's a prior swing that's broken. And in the case of CL on a daily chart, there's a prior swing that's broken. Kind of looks like a number 4, doesn't it? And then there's a clock that's ticking where either the signal candle itself, the candle to the left, or the candle to the right, if any one of those 3 are lower lows in relation to the prior swing, they inherit the possibility of inversion or backwardsness. And so here we have candle number 1, candle number 2, candle number 3. And you'll see in this instance that candle number 1 out of the sequence is the only one which is a new low. And so what's cool about that is we can see this in real time and anticipate that the market is about to reverse and potentially go in the opposite direction. So if we again compare what happens to pattern 4s normally, if you look in the handout that I've given you on page 23, you'll notice that an example from 7 years ago bears a striking resemblance in terms of price action, the pattern of what actually occurred. A pattern 4 will generally move back to the moving average. I use a 120 in the examples during the webinar, but a pattern 4 is generally a trend reversal signal. Okay, so a pattern 4 is simply a backwards pattern 2. It's a selling pressure signal that becomes a buying pressure signal. It's sort of like a gender switch, male, female, female, male, positive, negative, negative, positive. Okay, now there's something also called a pattern 5. When we have a higher high at either candle 1, candle 2, or candle 3 in relation to a buying pressure signal. Patterns are part of predictive indicators, predictive timing analysis. And so if we look at the prior swing and either candle 1, candle 2, or candle 3 are higher highs, they inherit the potential for that gender reversal, positive to negative. And it just so happens that in this example, candle number 2 and 3 are suspect in relation to this example. Let's blow it up and take a look. If we come over and analyze where the prior swing high was right here, you'll notice that we punched through it by 1 tick on the daily bar right here, which qualifies it to be a pattern 5. And so now, using nothing but the size of the moon in the sky, natural laws, Gann referred to it, we can come and identify where the pattern 5s have occurred. And there was one on the 7th of November as well as the 7th of October on candle number 2 and candle number 3. There's also a pattern number 4 on September 26th. And this is very interesting to me, as you'll see here in a minute. There is a pattern number 5 right here on that candle as well. So we'll put a 5 on there. So what's interesting to me is that the price of oil futures on the surface appears to be following, is correlated with the size of the moon in the sky at night. Now, here's a fun fact. What does the software say is happening in 2 hours and 7 hours rather and 34 minutes? What's coming up next, Dorian, in 7 hours and 34 minutes from now? Anybody? If you had to venture a guess, is a red dot or a green dot coming in 7 hours and 34 minutes from now? Does anyone else think that it's a coincidence that institutions, knowing the entire world is predisposed to purchase for the next 14 days, physiologically, psychologically, there's something. Our studies show it's related to the strength of the magnetic field and the human's sensitivity to it. But do you notice, Earl, how banks know to run the stops right before that cycle starts up again? Does anyone think that's weird? Why are they doing that? Right? And why, when they get to the new moon signals, are they running the stops on the high side? Right? It feels like, it appears that institutions are fully aware of our physiological and psychological preclusivities. They know that we're sort of hardwired and programmed to behave a certain way depending on a certain point in the energy field. It sounds very hippy-dippy, but it's really not. It's just science. And here we are, right before a day that you and I know is not a pattern 5. Does this bear any resemblance to what a pattern 5 looks like, Earl? Is this near a higher high? No. So what is it likely to do for the next 14 days? It's likely to push up. Is there any way to know how far it's likely to push up? Well, we could look and see how far it's pushed up historically between the last new moons and full moons, from the low to the high. I've done this with you so many times, I think I've lost track. And we can measure. How high has it gone when it's gone up at one of these signals, right? So if we just look at the last 3 full moons, let's assume it's this low, right? It won't print for another 7 hours. That next candle is going to form here shortly, but Earl, don't you think it's kind of weird that the last 3 full moons moved about that high from the low? They're the same, 1, 2, 3. It's almost like there was a program in place. Interesting. So we have to wait for the next day to open, but let's say the next day it's somewhere around here. We could push back up, and we know about how far it's going to go. But here's the crazy thing. All of this, the entirety of it, is based on the size of the moon in the sky. It's entirely predictable. It doesn't require any special knowledge or years studying under the expertise of a guru. It's sort of crazy how this works. A little ridiculous. We don't have to look at that. I want to show you another example of something that we're able to do. Last week during the webinar, I told everyone when the S&P would drop. And sometimes I need to go back and look at this stuff. Can everyone see on my screen the date 6 days ago last week? Can everyone see what we were expecting on our daily warp chart for May 1st until May 4th? Thomas, what were we expecting the market to do between April 25th and May 1st using a daily warp chart? Chris? John? The assumption was it was going to rise until May 1st and then drop until May 4th. Now, these were the signals from last Thursday. And when we look and compare what actually happened when you and I were meeting, we were on this candle here. And so Thomas, it went right up into May 1st and fell down. Now, Stanley, that signal wasn't based on the full moon, was it? No, it was based on our second category of analysis, data mining. And that's what we're going to focus on today with Warp. The ability to look at historical patterns that repeat with unusual frequency, something that keeps happening. Somebody somewhere keeps buying at a certain time. And the software goes, ah, I see you. And so now, coming into the full moon on the ES and coming into the pattern 1 on the warp chart, Earl, what else has just happened? Right here. What happened before that? Liquidity runs. What happened after that? There's somebody who knows when you are psychologically predisposed to panic. And there's a reason you get in the wrong position and then reverse. The reason that you get in the wrong position and reverse is because somebody is pulling the buttons and pushing the levers, pulling the levers, pushing the buttons behind the curtain. How many of you are old enough to remember that scene right there from that infamous movie? Pay no attention to the man behind the curtain. I actually think this is a funny article. The Federal Reserve is back in the Wizard of Oz mode. There's this understanding in financial instruments that certain entities are above the law. They do what they want when they want without obstruction or resistance or consequence. So the Federal Reserve, who makes money free for over a decade, all of a sudden hikes up the interest rates. And when the interest rates get hiked 16 times, the people who are the largest banks that know the rates are coming, which didn't put all their assets into the bond market, are sitting and watching as regional bank after regional bank after regional bank has a liquidity crisis. All these little banks had nowhere to put their deposits. And so they did what they always do. They put it in bonds. Well, then bonds went from 1% and 2% to 5% and 6%, and people wanted their money, and they had to take 50% losses. It's strange to me that the largest bank in the world, JP Morgan, took advantage of that in 2008, 2009, and bought the bank, got it half price. And now with First Republic, same thing. FDIC, Federal Reserve, everybody steps in and says, hey, would you like this regional bank for half price? JP Morgan says, I absolutely would. And if we come back and look through the lens of history, the guy who first started the global financing, where is he? Forgive me one second. Master shortened, master. Is it this one? JP Morgan actually said, the very first one, millionaires don't use astrology. Billionaires do. Did you know he said that? It's the weirdest quote that I have. I'm going to find it. And I promise we're getting into the intraday charts here, but it was important for me to mention this because it sort of sets the stage. There he is. There he is. Thank you. This guy, his offspring, they continue to benefit, seemingly being in the right place at the right time. And everyone keeps asking, how did they know? How did they know? How did these guys keep coming out on top? And one of the things that I suggest is that they know something about us that we don't know about ourselves. Meaning, they understand this. There's a series of signals and steps in the universe, a song that's playing in the invisible environment. Think of it like invisible weather, right? Something that's happening around us that we can't see, like ultraviolet light. You put sunscreen on to keep UV from making you sunburned. You can't see ultraviolet light, but you know that it's not helping you, it's hurting you. And so there's things that are happening in the background here, electromagnetic energy pulses, things that inventors like Nikola Tesla and Albert Einstein, the famous physicist, knew about how humanity was connected to the energy in the universe. There's no other way to describe this. And this is an example of one cycle that someone has been exploiting for over 150 years, passing along these secrets that really aren't secrets, they're just untaught lessons. And so it makes sense to me that the price of oil is about to rise. There's any one of a number of ways it can and places that it's likely to go to. We could do a thorough analysis and have an absolute understanding of where it's likely to go. But what's fascinating is they'll blame it on something in Ukraine. They'll blame it on something in an oil field somewhere or something the Saudis did. There's always an excuse that tilts our heads ever so slightly away from the impending move that's occurring. And so I show you these things not to brag. I've been watching this now for over 15 years. I've seen it so many times, it's second nature, it's commonplace to me. I can see the stop runs occurring. I know that this 3-bar pattern right here, this 3-bar pattern is a classic pattern, and it happens to appear on the day that I told you about. And now here we are touching the moving average and a stop run on the 4th. Well, how high is it likely to go from here? We measure from the low to the high, from the low to the high, from the low to the high. We take those and we put these over here. And we have a sense of where it's likely to go before the 8th. There's one level here, there's one level here, and there's an outlier up here. And now you start to ask yourself, here's the minimum. Maybe it goes there. Maybe it falls 1,000 more points. But what's the likelihood, Earl, that there's good news? Jerome Powell found a nickel under his bed. He's very excited, and he's dropped the interest rates back down to 0. Right? These weird articles, these weird news releases come out. Whenever I see Jamie Dimon say, oh, I think there's a strong possibility of a recession. Yeah, I think the world's moving into a recession, says Jamie Dimon, in charge of JP Morgan. I almost instantly look to the screens to see how high is the market going to go. Every retail trader is pulling out, and every institutional agency is buying. And then right after that move, he'll come in and he'll say, I think we're through the worst of it now. I don't think there's going to be a recession. There's no problem with the banks. Yeah, we took care of it with First Republic. And then everyone starts buying right as they sell. It's frustrating. It's maddening. And so this is just one example of what we can do with data mining on a daily chart. Right? We did something very similar with Tesla. If you've been following along, we did an analysis in one of the last webinars where we said, hey, how far is it likely to go down on April 14th by April 26th, right? How far is it likely to go down? And we used that same analysis, right, Earl? And we said, well, 1, 2, 3. So it was probably going somewhere between 159 and 161 by the 26th. No real magic. And now we're in a redistribution phase, right? If you're an options trader, boy, it sure looks like the risk on this trade is pretty narrow right now. Right? If you're a buy and hold for a week or two kind of person, it sort of feels like if we wanted to get in this, we could put our stops just underneath here and see if it goes up to the 15th. We could take a look at how far all of these buy signals have gone historically and get a sense of how high people purchasing Tesla might push it. Right? Advanced users, you could also take the split, pull it over and see that we're in a negative wave right now, and the positive wave is coming up over here on May 8th and May 9th. There's a lot of things we can do. But if we understand these cycles exist in time, and we go back and look at what the predictions said versus what actually occurred, we have the power to look at time in a way that most people never do. Any questions about this so far as we start to head out into intraday waters? Earlier in the week, we published predictive times for a slew of different markets. The E-mini S&P, the Dow, oil futures, NASDAQ, Bitcoin, Euro dollar. And so I want to go through several of those with you and just sort of get a feel for whether or not the times that we were waiting for things to happen produced any moves that would have been relevant to us. I'm going to load that page up here now so we can look at it together. And if you're joining us a little later today, the pace of today's class is a little slower than normal, just to sort of help me with my brain fog here today. Let me just log this in. I'm going to load up that page that you guys all had a copy of with the forecast from this week. It's a little harder for me to get to it. We've actually limited the amount of time that people are able to check it out. And it's kind of a pain for me to get to it now because I have to log in on the website and go looking for the page. I should have done this before I got here today. That's fun. Yeah, nothing embarrassing about this. All right, I'm on the wrong thing. Pages. Please bear with me. I'm really sorry. I've been told that this is the best the internet has to offer me. There we go. Okay. So this is the page that you guys had access to. And on that page, it had the histograms for Wednesday and for Thursday of this week, as well as the euro currency, the Dow, the NASDAQ, the euro dollar, the pound dollar, and Ethereum. How many of you have been following along with that? Hey, Alexander. Yeah. So if we look at a market like the euro US dollar, as we kind of warm up into that, one of the things that I want you to see is that when we use our indicators, there are two halves of the screen. You sort of have the probable future and what occurred in the past, right? So on the euro US dollar here, we're seeing that 3 a.m. Eastern time this morning, I think 7 or 8 London time, we were expecting a selling pressure signal, and that they nicked the high, right? They came right back up to this area again, in keeping with what we saw, and then it dropped all the way down until 10 a.m. Now, when we come here and we look at this, one of the things we can see is what's expected next. When we look at the price action surrounding that dot, we can analyze what it's likely to do. And so in this instance, in a downtrend, right, if we look at what's taken place here, Alexander, can you see the three peaks right here? And the third one is lower at 3 a.m. this morning in relation to Richard Wyckoff's diagram over a century old. We're at a buy time right here, coming into a sell time. So when we understand how price action is moving in relation to time, we can start to make some conclusions about what's possibly in store for us between 7 p.m. Eastern and 7 a.m. Eastern tomorrow. Tim, does that make sense? Alex? Okay. These signals don't repaint, they don't disappear or reappear, print later. So we have a sense of what's likely to occur in the future. When we take a look at the ES today, we can take a look on a 3-minute chart and get a sense of what was happening. And what we'll do real quick is we'll just sort of cover the lowest hanging fruit, if you'll bear with me. I have the advanced patterning turned on. So it's automatically showing me the pattern 5s and pattern 4s. Let's go ahead and change this arrow over to white, and we'll save that as default. And let's just sort of go hunting for the lowest hanging fruit, shall we? At 11:06, we had a pattern 4. At 11:36, we had a pattern 1. At 12:12, Alexander, we had a pattern 2. At 12:39, we had a pattern 1. And then at 1:06, we had a pattern 2. At 1:21, we had a pattern 5. At 3:15, the market rolls down into a pattern 4 right here. At 3:51, a pattern 1, and then at 4:48, after the market closed, it drops down into another pattern 4, candle number 1, candle number 2, and then a breakthrough. Push up at 16:30. If we come and look earlier, we can see that at 9:27, we have a pivot. So this is the open to the close of the US session. So at 9:27, the candle opens. There's a swing high just above us, Alexander. And from the open until the maximum favorable excursion, the market moved 4 points, $200+ in our direction. So can everyone see that there was a pivot here that we moved up into a double top? And then Alex, would you concede that it dropped down at 9:27? Let me just make sure I'm looking at the same settings as you guys, 7:14:00. And ES 3 minutes. Stand by. There may be an issue. Someone else posts the times for me on the website. 8:33, 8:39. This is a 3-minute chart, right? 8:33, 8:39. I'm going to try something real quick, Alex, and just see if maybe somebody made a mistake. I apologize. No, you're absolutely right. The times don't match. Well, that's great. That sort of makes this 8:33. Yep, Andrew, I reloaded my historical data. I had a glitch in the historical data. They should match now. My NinjaTrader had an issue with the cache, it appears. Okay, so right now, the times match. 8:33, 8:39, 9 o'clock. 8:33, 8:39, 9 o'clock. So Andrew, are we good now? I don't want you to think that I was doing something screwy. Let's try that again. Up at 2:33 at the pattern 4, up at 3:30, down at 4:36, up at 12:42. So the afternoon when the market started breaking out, things look pretty good. 12:06 marks the low, and at 11:12, Andrew, we have a pattern 5 right here. So far, so good. 10:48, we have a pattern 2, marking this high right here. So pattern 2, pattern 5, pattern 1, pattern 1, pattern 4, pattern 1, pattern 2. Everybody good so far? Andrew, you with me? I want you to try to keep up if you can. I'm not trying to lose you. Okay. 9 o'clock is a pattern 2. Down from 9 o'clock until 9:33. And then Andrew, you see how 9:48 is a pattern 4? It's got those little white arrows underneath it. We're going to say that 9:33 was a failure. It did not go up at 9:33. We're going to say that 10:03 was a failure. Andrew, there's buying going on here in the downtrend. People are taking profit. They're pushing up at the bottom. And they're selling, reselling in the redistribution phase right here. So Andrew, do you see how this section is sort of like what I was just showing on the Euro US dollar? Whoop, here we go. When the market's in a downtrend and we see consolidation at a buy time, it's likely to continue down. Most people trade breakouts at that range. So far, so good. We'll call 10:03 a failure, though. Forgive me. Because it's not entirely obvious that it went straight up. There's a very small retracement, Andrew. It's only 3 bars, but there's a spinning top, bull candle, bull candle, bull candle, into 1148 at 1136. Everybody see that? So pattern 1, we'll draw arrows and lines right to the candle. And then, Andrew, check it out. At 1148, since Tuesday, we've been waiting for, there it is, 1148. 1148, we were waiting for a selling pressure signal. At 1148, it's a plain Jane pattern 2. It hasn't broken through the low yet, the swing low. So we're waiting for it to go down. At 1148, it opens and starts going down. So the first half of the pattern 2 is working. But then, Andrew, do you see how now it's violated the swing low to the left on the third candle? First candle didn't violate the low. Second candle didn't violate the low. Third candle does. Third candle gets the white arrow. Software puts it there automatically on the close. And now it's expected to go up. But Andrew, look, it just goes sideways, which means that people are doing what on the pattern 4? They're buying into the low. So I'm going to put a white arrow on here, and then it actually, on the pattern 4, on candle 3, it flips. 1218, Andrew, is a failure. The first attempt, it tries, it goes down a little bit, nothing doing. But here's the cool part. Andrew, we finished where we started by 1242, right? It doesn't hit our stop, and we're in it. And we have 1, 2 chances to get out, break even before 1242. In fact, if we entered short at 1218 and got out by 1242, we lost $3. If we got in at 1242, it goes almost $20 straight off. Interesting, right? So when we look at the entirety of the US session, there was a pattern 5 at 839 too, Andrew, right? I'm going to put a white arrow there. We can agree universally that 1003 didn't work. We can agree universally that 1218 was a failure. We can agree. Are there any others that I missed? Andrew, which other ones did we say was a failure? Again, I'm sort of operating at half speed today. Good, good. Oh, there it is, 933. No good. Good, no good. Good, 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 no good, 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 good. Is there anything here, Andrew, that you want to dispute? Anything that we can say, Michael, with all due respect, you're sort of out there in left field. I'm using the software to automatically generate the signal patterns. The patterns that we saw are working on natural energy cycles like Where's the chart we did? Yeah, like this one. This is a chart we actually did last week. Remember where I said it was going to go by the next full moon? Earl, I think I nailed it. Anyway, the same patterns that worked on a daily chart are part of time analysis, predictive times. And this is where a lot of guys didn't follow through on stuff. So Gann didn't know about these. He would just sort of say after the fact, yeah, it went the wrong way. Wells Wilder, who offered a course called the Market Delta Society, he had the same issue. He would draw where he thought the move should have been and say, we were close. But when you understand the rules of the patterns, so how do you set up your entry? So before I move forward, Tim, I just want to make sure, are there any times here where we can dispute and you can tell me, hey, I don't want to count that one. It didn't do what we expected it to do. That's important to me because most gurus try to really throw a pile of BS on you, right? They go, whoa, if you had my guru knowledge, you would have known to do this or that. And I just want to make sure I'm not pushing through because this is an important point. The question that's before us, right? We all started out pretty hostile. Alex was like, none of those times worked. The quote was, most of the times, today's ES didn't match for the most part. And so I'm giving everyone here an opportunity when we use the patterns that are in the book that I've published 7 years ago and listed in the webinar handout section for the last 7 years. So that's 350 webinars. It appears that there were 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 times that went in the direction we anticipated based on the pattern interpretations, and 1, 2, 3 that didn't. So I just want to be clear before we move forward into things like entries and exits that we're on the same page. Most webinars, it's not this hard. Tim, we're going to look at 10-minute charts. You and me. We're going to load a bunch of them up. Because you're here and I'm here. And we're going to duke it out. And look at the signals together. Because we both appreciate Colin. Okay, Andrew's saying, I'm not saying they didn't work. I am saying that the file I downloaded for today, the times are 100% different. Andrew, are you a user of the software? Or are you looking at the marketing histograms? Alexander Newcomb. Are you looking at actual charts as a customer? Or are you looking at the forecasts from the web page for the marketing sequence? Okay, here we go. So Andrew, I'm going to go back to that page. ES, Thursday, May 4th, market forecasts. This is important because most webinars, guys are lying. And I don't want you to think I'm lying. It's pretty important to me, actually. Okay. So here we go. Let's go get the drawing tool. 9 o'clock. 9 o'clock. 9:35, 9:48, 10:03, 10:48, 11:12. So far, so good? Okay. These times match. Let's go over here. Pull it over. Draw it again. 12:42, 12:42, 2:33, 2:33. Okay. 3:30, 3:30, 4:36, 4:36. So they match. So I'm not sure. I'm not trying to argue with you. I'm just trying to see where the discrepancy is. Tim, when we look at entries, that's where things get different, right? That's where we start veering into the middle of the lane. So now, I hope that answered your question, Alexander. When we're looking at entries, there's a couple different ways to go. I adopt a trend strategy. And so, Tim, what I do is I try to look for signals that are in the direction of the trend. On the web page that had the forecasts in it that Alexander was following, I mentioned that we'd be using a 120 period exponential moving average, EMA. A 120 period EMA. What we then do is we use a 1.5 ATR stop. 1.5 average true range values from the low to the stop in the case of a buy signal, from the high to the stop in the case of the sell signal. And so that's a dynamic stop level, Tim. It gets smaller as the market slows, and it gets larger as the volatility increases. Make sense? So having a dynamic stop sort of reduces the possibility of getting whacked with a small stop when the market's moving with massive liquidity as it can. Like this afternoon was completely different than this morning. So we're going to enter at the close of the signal candle that's in the direction of the trend. Let me just stop and say something. This is not easy. This is hard. I'm bringing you something that's taken me a decade and a half to master. I'm still learning. And so it's okay to feel disoriented right now, right? Let's just be real. I want to be 100% transparent and honest with everybody always, because that's what I expected when I was in webinars like this almost 20 years ago. And nobody was. It seemed like everyone was deceitful. They had an agenda. They were marketing gurus. They didn't have an ounce of gray matter dedicated to the puzzle that we're trying to solve here today. And so, above and beyond anything and everything, I would rather all the signals that I gave you that we just looked at together that matched what was on the website since Tuesday, I would rather all of them were horrible and no good and not profitable than have them faked or jury-rigged in some way to look great and use a deceptive practice to achieve that. Okay. So if you feel uncomfortable with what I'm teaching and you smell the faintest trace of mierda, call me out on it. All right. I had an issue with my data. I didn't know it. I was looking at signals and saying, here is the law. And they were wrong. We figured out the problem. Happens about once every 6 months or so. So we're in, we're out, and then we get out, rather, Tim, at the next signal, the close of the next signal. So we're in, we're out, ideally, right? This is a perfect world example. We're in and we're out at the close of the next signal. This is called the signal with trend, SWT. It's pretty fancy. Had a team of creatives working on that. SWT. SWAT. That's a signal with trend. We mentioned that on the forecast page. The next is called a puncture trade. And a puncture trade is a failure with trend. And it's predicated on what we were just kind of looking at a minute ago. So Tim, Alex, if you remember, when we have a buying signal in a downtrend, for example, there's profit that's being taken at the lows and new market participants are coming in at the high of that range. So buy, sell, buy, sell, buy, sell, and pretty soon that pattern is exhausted and it eventually continues to fall. And so what we do, Tim, is we trade the breakout of the buying signal stop. We trade the breakout of the buying signal stop. So check it out. If the market is rising and we're at a selling pressure signal, that stop, Tim, is 1.5 ATR values away from the high. What the software is trying to communicate to us is that historically, a lot of times lately, Tim, they're selling into this move. That's what this dot represents. It's a historical landmark in regards to a time-based landscape. You are at a time that usually causes the market to drop. It's happening a lot lately, and I wanted you to know. Thank you, indicator. Well, Tim, we also know that there's a possibility that it could do this, right? It's still a valid signal. Selling is occurring, but then it could finish before the next buy time kicks in. And so the way the trade works, the way I've described it over the years anyway, is I enter one tick above the stop. I enter one tick above the 1.5 ATR stop. Whatever candle punctured that stop, I put my sell stop underneath it. So, come back here. There's my sell stop. My buy stop is one tick above the 1.5 ATR value. And so I'm looking for it now to continue up, exiting at the next buying pressure time down below. That looks like this in the other direction. Well, that looks like this in a real world example here. They just went right up through the sell time stop. You entered a tick above the blue line, and your stop is one tick below the puncture candle. The reverse holds true for buying signals in a downtrend. Okay? So now, if we're looking at this together, right, we'll start the earliest I like to trade is 9 o'clock when oil opens on the ES, right? The market's open. At 9 o'clock, we're going to enter at the close of this candle. You could have entered at 8:39 after the report. Tim, it's a pattern 5. So we treat, let me blow this up so you can see it better. At 8:39, it's a pattern 5. The close of the candle is right here. With pattern 5s, Tim, I look at the stop below and I use that above me. That's 1.5 ATRs above me. This is 1.5 ATRs below me, right? So I enter short right here at 8:39. I get in and I get out by the close of the 9 o'clock signal. That's the end of my window. My time envelope has closed. And so we're out with $4.50. Now at 9 o'clock, Joseph, I believe the software should be set to a 1.5 ATR for the volatility stop offset. 1.5 is the default value for the software. The closest you can get, the smallest I've ever made it, NASDAQ, the E-mini NASDAQ, which is my favorite market, you have to use a 1 because a 1.5 will rip your face off. It's too much rope. Too much rope for that cow in the rodeo. So now, Tim, at 9 o'clock, I'm going to enter short at the close of the candle. My stop is here, and I'm going to exit by 9:33. So I'm in and I'm out at 9:33 for about $2 more. So far, so good. Okay. Now, at 9:33, am I above or below the moving average? Below. Below. Okay. So if I'm below, we can go back to the page. We will be showing how the signals can be traded using one of 2 simple entry rules called signal with trend or the puncture trade. This video provides an overview explanation for these. So in the video, I've covered the puncture trade before today. We're sort of locked in. And now, Tim, there's our little consolidation range, right? It's actually been holding in there for a while, and then it comes out. We're prepared, and we're going to enter right here. 1 tick on the other side of the Mason-Dixon line right here. When we do, our risk is going to be 1 to 2 ticks above the puncture candle. So this candle opens and shoots straight down. So my buy stop is going to be here. Now, why do I say 1 to 2 ticks? Because sometimes you get a little squirrely. You start shifting around in your chair. And while I am a strong adherent and proponent to mechanically trading, I give myself 1 tick of control, which in the overall scheme of things is meaningless. It's meaningless. But I feel like I have an element of control. It gives me, it's like a leash that's 1 inch long. I did something. And so I tell people 1 tick for years, but now I say 1 to 2 because I know somebody's going to go, and you feel like, I had some control over the trade. That's why I say 1 to 2. So if we enter 1 tick below the white line, We're now in a markdown. The consolidation is over, and we're in from here, Tim, to the beginning of the next signal, which is the close of the 948 bar. Wouldn't that preemptive to your signal? My rule says that in a downtrend, Tim, I'm going to short it when it goes through that line, which is 1.5 ATR values away from the low of the 933 candle. That rule was carved in stone in the video that accompanied the webinar forecast page. Joseph, you can do all that with the Aurora module, and that's available right now as a subscription product if you wanted to dive deeper into it. Aurora is a market analyzer for Warp. So we're short for $12 into 948. Everybody with me? +4, +1, almost 2, +12. Now, what happens at 948? We have a booklet that tells us what to do. That's been around for 7 years. There are 3 candles in a pattern 4 sequence. Candle number 1, candle number 2, candle number 3. And when we're trading with the trend, there's a rule. The rule says we put a breakout 1 tick underneath the pattern 4 signal. 1 to 2 ticks. Let's actually go back and look so I can't be accused of lying. First, use a breakout threshold below the lowest low of the 3 candle series. I recommend at least a 2 tick gap to use as a trend continuation level. Who said that? I did. When? 2016. So at this point, guys, the 3rd candle, 2 ticks underneath, we're at 73.75, so it's going to be at 73.25. So Tim, if it breaks below this level, we'll treat it like a puncture, but it never breaks below. So no trade at 948. We have a puncture at 1018. Now, I'm going to count it. We're going to draw it, but I want you to see what the risk is. It's a $14 risk if you trade the puncture at that point. Forgive me, I had something in my eye. I've got really bad allergies lately. It goes $350 in your favor in the puncture. Now, if it hit 500, Tim, I would count it as a break-even trade per the rules in the video, but it doesn't, so I can't. And so now I have to let this thing go all the way to the end and give back $6.75. So it went 350 in our favor. We give back 6.75. Now here's the conundrum. There's a trading system that has losses. At 1048, we're expecting the market to go down. It goes down, it goes down, it goes down. Does it go $10? No. Again, this is $350 plus, $362 in our favor. That's not my break-even rule. I can't count it. I have to get out with a loss by 11.12, minus 8. We get in at the close of the pattern 5 candle. It's in the direction of the trend. It's a selling pressure signal, and we have to get out by 11:33, we get $11 back. 11:36, we go up, we go up, we go up. Oh, we drop. Now at 11:48, it's not a pattern 4. We're short into candle 3, which is a pattern 4, and we exit plus 4. The pattern 4 candle 2 ticks below is where? 75.25. Right here. So at 25, we break through the low right here at 12:03. So we're into the lunch period where we usually stop trading, and we have to get out at the next signal, which is 12:06. So Tim, it doesn't really go anywhere. It's a scratch trade. So if we look at it with a calculator, using the predictive times and a simple trend tool, 4.5 plus 1.75 plus 12.25 plus 11.25 plus 4.75 plus 0 minus 8 minus 6.75. Earl, we're looking at a $19 morning from a few minutes after the economic report until lunchtime. Times $50. A contract is about $987. So Tim wants to know, hey, Michael, I'm a mover and a shaker. I got stuff to do. Does this work on tick charts or just time charts? So Tim, it's important for me that people know a couple things. Number one, it's working on the lower time frames. It's working on the higher time frames. You can use it on stocks. You can use it on forex pairs. ES 0623. Let's load a range bar. Let's load a 12 range bar. Load 6 days of historical data. Takes a little while to load non-time bars, so we got to give it a second to load up. Okay. We'll come into the indicator. We go to TimeWarp. I'm going to load a 1, 2, 3, 11 on that with trading days. So Tim, I can load it on a tick chart. I can load it on a Renko chart. I can load it on a volume bar. Let's just look at a 300. I wonder what that would look like on a range bar with a 5. There we go. Woo! So with range bars and tick bars, you have to dial in the settings. I only trade ES. Join me. Together we shall rule the empire. I don't know why, but you sound like James Earl Jones in my head. There we go. That's the setting I was looking for. So yeah, we can tune it to a range chart or a tick chart or a volume chart. It didn't used to be able to do that, but there were a lot of Tim Ruths in the world, and so we made it work with that. So when you get the software, if you ever tell Colin you had a change of heart, you can absolutely analyze those things. There's a 10-minute chart, by the way. I think you said you looked at 10-minute charts. I used to believe, like you believe, Tim, you should know the market you trade, but that was before I understood time cycles. And now I don't care what market you trade. I know things about time that will blow your mind. For example, if we go back to the 3-minute chart, you see this signal at 2:33 and 3:30? There's a law in time that says I can take any two gaps in time, and if I preserve the oscillation, I can divide them into thirds. Well, what does that mean? And again, I can't fake this. We didn't know what price action was going to do. I taught it last week. You can look in the webinar. If I have a buy signal here and I have a sell signal here, I can put two lines at the 33.33% and the 66.66%, and I have to make this a sell and a buy. So we have this. It's a harmonic of the primary wave. So Tim, I had a big gap between 233 and 330. The 33.33 came in at 251. The 66.66 came in at 1509. Right? That's kind of weird. The next signal came in at 1551. And then Tim, the next signal came in at 412. No, it's not cool. I have a bugaboo where people use those kinds of words. This is really interesting. This is really cool. Right? Boy George was interesting. Elvis was cool. This is fundamental. Right? If I can point to the size of the moon in the sky and tell you how far oil is going to drop before the next full moon, my max prediction was from the low of this candle to here. That was as far as I thought it was going to go. That's an $8,950 move. And the risk, if you put it just above the candle, was $2,000. That's not interesting. That's foundational. So when you look at your ES, you have to be a student of it in your mind. You have to look at the ins and the outs and what did Charlie Munger say about the S&P? And did Warren Buffett concur with his analysis? And what is the payroll shortage? And I better check my zero lag whatchamacallit, because the more I study the ES, the bigger of an expert I'm going to be. And I don't mean to sound like a dick, but honestly, that's too much work. I can open any chart for any market. I can look at Bitcoin, which I hate. I don't even know why people still look at it, but they do. And I can pick a 5-minute chart and load the study and JP Morgan this thing and say, what are these ass clowns doing? And there's a 5-minute Bitcoin chart. And I'm instantly better than the top 5% of traders in the world. And I don't have to know jack diddly about Bitcoin or SVG or Sam Bankman fried green tomatoes, whoever the hell. I can just look and see. When do I go long? When do I go short? So for those of you that are of the mind that you have to be this ultra focused, single market, dedicated Buddhist monk, I've sworn off all markets but the Euro New Zealand dollar. Okay, that's fine, but it's tiring. There are other markets that are moving. That's all I'm saying. I know how that sounded too. I did not come out well, Earl, with that monologue. I did not engender feelings of affability from Tim or Alex just now. But it's true. I told you I'd be honest. Yeah. Here's the problem with liquidity. Tim, you can fake liquidity. Do you know how I know you can fake liquidity? Because JP Morgan just paid $1 billion faking liquidity using a system called spoofing. When you look at your charts and you say, oh, there's a pocket of liquidity there. Not really. Not really. They made orders appear like they were waiting that weren't really there. A penalty of that size would be a record for spoofing, which is when sophisticated traders flood markets with orders, liquidity, that they have no intention of actually executing. It's all a lie. It's all a game to them. It's a fugazi, it's a fugazi. It's a witsy, it's a watsy, right? The Big Short. And I come here every week and I show people. And everyone is pretty sure that their way is right and the stuff keeps working. I tell you what the first guy said he was doing, the most powerful bank in the world is doing, and people still don't believe me. There are days. There are days. There are days. Anyhow, I love all you guys. I did promise to tell you the truth, though. And I've met a lot of you. I've met most of you, I think. 15 years, about 300 people a year. What is that? 3,500 conversations. I've heard it all. The program that we're talking about today, if you would like to have the times and the patterns and have some insight as to what is likely to happen tomorrow and the next day and the next day, we have the times right now for tomorrow, Monday, Tuesday, Wednesday, and Thursday of next week. We have them. You can have them. The customers here have them. You can have them too. I've pasted a link into the GoToWebinar chat box. At the very bottom of that page, you're going to see a price, $2,495. Today's ES from 8:30 to 12 o'clock, I showed you using trading rules that were published beforehand and times that were published beforehand, a net gain on the S&P of close to $1,000 in one morning session. If you click on the orange Buy Now link, you'll have an annoying pop-up. That pop-up is there because we have people that run a trade room. One of them is my best friend, longtime business partner, Ron. Ron, also a trader, occasionally now pops into the trading room and shows his entries and exits and setups in a live market. We also have a customer now who runs the room, very nice gentleman named Colin from the UK, who's been using the software for over 10 years, I think. If you're the kind of person that wants to watch markets like the S&P and oil and the Dow and the Russell being traded in real time live, there's a training room available. It meets 8 o'clock to 12 o'clock Eastern, Tuesday, Wednesday, and Thursday every week. If you sign up with the room when you get the software, it's $149 a month. Works out to less than what you'd pay a babysitter every hour. If you don't want that, you like to go your own way like a Fleetwood Mac song, you can click on the go to checkout without the pro training room. Now, this is the purchase agreement. A lot of you have selective amnesia. Twice a year, someone files a chargeback for a refund. We'll sell about 300 units, Earl, and then 2 people will file a chargeback. And they forgot the fact that there was a purchase agreement. This is not a try it for a month and then tell Visa we never sent you the software. When you click that X, you're saying that you read it. The website registers that on your IP address. And you actually have to agree to the terms and conditions. Please don't have selective dementia 30 days from now where you say you didn't know that. We promise in return to maintain the code. We don't charge a yearly or a monthly maintenance fee. We make sure it's bug-free and updated to everything NinjaTrader does on their side. We provide training events and training opportunities. We do one-on-one sessions with people. We connect you to other customers that are doing well. So it's a relationship. We're small on purpose so that we can offer you those types of amenities as you're learning. There's a video training archive that we're constantly updating as we learn new things like the patterns. Those weren't always in the software. They were included for free. So just be kind. If you commit to it, just remember there's 5 people here committing to you. Also, you may get an email or a phone call from a gentleman named David. David's with us. He's part of the team here. He helps onboard new customers. He's an options trader and all-around great guy. Probably one of the friendliest people you've ever met. So he'll help you figure out. You say, Dave, I got 12,000 bushels of apples. Can we make a deal? Dave's going to figure out what the open market price for apples is, and he'll find a way to get you the software. So please, when he calls or emails you, answer back, even if you just tell him, I'm not interested, and then he'll leave you alone. Don't make him chase you around. There is a promo code available because marketing people say you're supposed to offer a promo code. If you punch in the letters WARPOF, lowercase, no spaces. If you plug that into this box right here and you hit apply, it will take 500 greenbacks off the price. This is a lifetime license NinjaTrader indicator, and you can connect it to your Interactive Brokers account. You can connect it to your TD Ameritrade account. You can connect it to your forex.com account. You can use third-party data from barchart.com, kinetic.com, Rhythmic. I think you can connect your Apex investing prop shop data to this too if you have Rhythmic or CQG. You don't need NinjaTrader as a platform paid for. It's free for charting, and you can connect to a bunch of data sources. Okay, you can also use PayPal. PayPal also has a pay later program if you want to break it up into payments and split it out. They'll help you do that. If you're just going to use a credit card or debit card, just click on the checkout button, and that'll take you to the end. Woo! We had a good time today. I did. And again, apologies. I'm sort of at a low energy state today, and creeping through whatever this brain fog is. I know you said vitamin D. I know what you said. I'll work on that. I appreciate you guys. I want to thank you for your time. We do these webinars every weekend. If you have questions, you can email me, you can call me, you can Skype me. Matter of fact, let me put that information on the screen so you know how to reach me. It's Michael at backtothefuturetrading.com. My Skype is Integra-Michael. My cell is 336-703-7667. That's my mobile. Please text first. I might be eating supper or holding hands with my sweetheart. I will put that into the chat box if you want to copy paste that somewhere into a notepad. You can reach me as well. If you have questions about onboarding, David at backtothefuturetrading.com is the email, and his phone number, I got it right here. It's coming. I should have memorized it. That's embarrassing. Oh, I got it. It's 727-742-2626. And that's regarding onboarding sales inquiries. Dave, I want to get warp, but I have questions about force. What's this Aurora thing? I was referred by this guy. He said to make sure I get this thing too. Dave's a great resource for all of that stuff. And again, super nice guy. You'd do worse to talk to some of these other weirdos. You could learn a few things. He's got some great stories too. May the wind be at your backs. May the sun shine upon our beautiful, handsome faces. May the valleys rise up to meet us. May the mountains lay low before us. We are living in interesting times where we're on edge constantly. We're at each other's throats. I hate this guy. I hate that guy. This guy hates me. I want to thank you today for coming together in a spirit of mutual learning, spirit of truth and honesty and transparency. My job is to share what I've learned and what I've focused on and developed over the last 15 years. We've acquired a 4.9 out of 5 Trustpilot rating among verified customers with a range of experiences from new to veteran traders of 10, 20 years or more. It's important to me, most important, that you understood everything I said here today was true. We didn't hide anything from you. We gave you the times in advance. We gave you the rules in advance. We gave you the patterns in advance. 2 days later, a week later, everything that we were looking at, some pretty interesting things happened at them. And we'll continue to. They've been doing this, happening like this now for over a decade, over 3,000 or 4,000 customers now. And we'd love the opportunity to be a part of your team. If that's something you feel comfortable and natural about, go ahead and move forward. We'll get you signed up. There's free installation, white glove service to make sure it's installed correctly to get you started right away. You can have this in a matter of minutes. It's a self-executable file. It'll download the indicator straight to your desktop. If it's not for you, that's cool. We can still be friends. I hope you find a system that you're comfortable with, that aligns with your personality type and the market you're trading. I gave a couple of you a hard time. I kid because I know what's available to you if you use this. Smaller stops, larger targets, less frequent trading, no revenge trading, proactive versus reactive, knowing when these stop runs are most likely to occur, and not getting in the wrong direction. That's what most people say happens when they get this, and I wish that for you. So I say things a little weird sometimes. My wife says I shouldn't be allowed around other people, and I think she's right most of the time. But today, I hope you at least came away with the sense that I care about whether or not you do well, and I care whether or not you believe what I said here today. Always, always, always tell you the truth. I love you guys. Customers, thank you for coming. I hope you picked up some new information here today. We'll see you same bat time, same bat channel, 4 o'clock next Thursday. If any of you need help, you know where to reach Ron, Rachel, me, David, or Colin. We're always here to lend a hand. Have a great night. You guys take care and welcome on board to our new customers. See you.